Video morning brief of the U.S. stock market, 8:21 a.m. Eastern Time, December 5th. I'm Rich Paz for Critical Point. You're looking at the 6-hour chart of the futures. They traded lower yesterday, rebounded going and closed, and traded down lower overnight. So we had the market off 14, 16 points here. Nasdaq, something similar. Dow Jones, something similar. Indicator is oversold, saying if the model's looking for a bottom, then we have a right to look for a bottom, at least from a technical perspective. The model's saying yes, that's probably a good idea, and the model's looking for a level 4 bottom. It was to be yesterday or today. Unfortunately, internally, I can see it may take beyond 1 p.m. today, but ideally it bottoms before 1 p.m., so we really don't know. It could stay down all day, but it really ought to be up tomorrow. And what I'm thinking is it can be up some of today into tomorrow. So that's our level 4 interweek swing forecast to be bullish. Now, things that are bothering me, as well as some of my affiliates, and if the model could be a person and talk, it would probably be a little concern too, is the model come down, or the market came down a large amount towards a more important level 3 bottom placed last week. So the market's having some issues, some supply here, and I'm just concerned is a little weaker than it should be. Now, they snapped it down too fast, so someone said, hey, I'll buy it, but they put it up too fast, and now it's drifting lower. That's a typical behavior in modern-day markets here, and it's trying to test this low. But again, we're back to this level 3 bottom. Really do not want to see it trade below 44.75 for the futures, and I'll look at the cash next. But also, these two moving averages are nothing more than a 5-bar or 5-candle open and close. Get it traded above that, it'll look positive. Get this 5-3-2 slow stochastic to turn positive on this 6-hour chart. Give a buy signal. I think we got a level 4 bottom. So start trading up into the 45.69, 45.70 areas. We should have a level 4 bottom. Now, it's also bothering me that the market has already used a considerable amount of time on the downside, so that it's robbing it of how much time to rally in level 4. It may be nothing more than a brief pop just during a day even. And so even if it rallied today, instead of rallying into tomorrow like it should, it may stop today, set back. Now, there's a 20% probability the next level 4 top, if it comes in quickly, doesn't really matter, that it won't come back down that much. And then we'll have a lengthier, longer level 4 on the upside here. Still have outstanding upside targets here. The market can still move higher later this year, but it is giving us some issues coming back to this bottom, but it's also level 3 bottom, that is, but it's also oversold. Now, if we go with the hourly chart for the SP500 cash, and that's been popular for decades now, these are the level 4 business cycles, some more volatile than others. It should have bottomed yesterday, but I can allow it to be in line with the overnight lower futures market. Frankly, I think the futures are probably a buy right now, but we're at risk that they're going to have to sell some more in the day session today, okay? So if it starts trading below 45.57.90, I'd be concerned they may want to test the low of 45.46.72, but there's still a chance this level 4 would just move over today, would still bottom and then move higher. Now, if it trades below 45.46.72, we have to be concerned they want to test the level 3 bottom at 45.37.24. In violation of that, could be a sign we're in a slippery market, perhaps into next week, that they just don't want to buy until they get the Federal Reserve meeting next Wednesday out of the way, get the Tuesday CPI inflation report out of the way, and then, of course, Friday we have the jobs report that we have to get out of the way. So all these things could be bothering the market to make it weak. Now, on the flip side, if it'll trade above yesterday's high at 45.72.37, then I think I'll want to fill this gap, and this gap is far too large, far too easy to see. In my opinion, it's a bullish signal, but I don't know, is it bullish immediately here in the next few hours? Is it bullish a few days from now, meaning they got to put it down first? Can they put it down a huge amount and it's days before they bring it back up? We just don't know at this time, okay? Now, if we flip over to the daily chart for the S&P 500, oh, by the way, I wanted to show you, I use the SSO, even though it's a very small market, because it's a leveraged market and quite popular with futures and derivatives people who might not actually want to use derivative futures, the more leveraged people. Big sell day on November 29th, but it didn't accomplish anything. That should concern the bears. They made a mistake in why they might want to buy it back, but at the same time, this morning we can see it's drifting back to yesterday's though it's drifting back to the level 3 bottom last week, it may be concerning them that it just wasn't time for it to really go down, but maybe it is now. Don't know for sure. The volume yesterday was kind of average, and yes, they opened it lower, but they couldn't really accomplish any more than that. I wonder if that wasn't more of a shakeout where, hey, I'm knocking the market down overnight, scare you people out of your stocks, and then I'm buying them all day long. But this morning it's starting to slip again, so maybe that's the wrong statement here. So why this sloppiness here in recent days? I think the market's just trying to prepare for the jobs report on Friday. Now, this is the cash S&P 500 daily, and we actually have a bullish acting daily indicator that has not paid attention to yesterday's decline. There's that gap, which some say was just a trader's gap, and sometimes they don't work as a signal. You shouldn't pay much attention to them. It's the breakaway gaps that are more serious in terms of being bullish or bearish. At any rate, I think the model is saying it should take out the Friday high. Okay, so I'd like to think we got some activity here today and going to fill that gap and put it up there. And we do have outstanding upside targets in the 46.30 to 46.50 area for the cash market. But those targets will be canceled if it trades below 45.37.24. They may come back, but they'll at least be canceled, and we'll have to be concerned of bearishness. So now let's flip over to the daily S&P 500 with the futures, or with the model analysis, as well as some technical stuff. And what we have is the market came down close to the level 3 bottom last week. There's the top. The market should be trending higher into next week, perhaps beyond the Fed Reserve event, meaning the door is open for a favorable or neutral, maybe even bullish jobs report on Friday, and the same for inflation on Tuesday, and the same for Fed Reserve on Wednesday. The market can just be higher, and it could be just working higher right into the end of the year, giving us that Santa Claus rally, okay? And fulfilling what I think is its obligation, its fate and destiny of those larger uptrends for this month, and dating and starting back on October 27th, okay? But we could be in some slipperiness where people generally want to sell. They don't want to, but they're going to kind of protect themselves, and it can get away from them, and they can get scared. And they may not see the best demand till we get next Wednesday's Fed Reserve out of the way, that they want all these data points cleared up, take a look at them, assess them. So, trade below yesterday's low in the futures, 45.53.5, bit concerning. Trade below 45.44.79, and I think it's 45.40 or something like that. No, 37. I gave it to you for the cash. I gave it to you a moment ago. Well, what would occur if it takes out the low on November 30th? We have to be concerned it wants to go lower into a level 3 bottom mid to late December. But ahead of that, it ought to go in a level 3 top. And what it may mean is just going to be choppy all the way into the Fed Reserve, that it's up, down, not really accomplishing much, but unfortunately it might have a little negative bias, because after all, we've had an incredible run up here where people will be nervous that maybe they're going to get back too much profit. They're asking themselves, is it possible it comes down to 44 here to the 100-day moving average? And what about all those other averages? Did they really overdo it? Okay, and so we just don't know how much downside to expect here. But ideally, that low high on December 1st is higher than level 3. It's too late for level 3. It's warning that it wants to go higher into a level 3 top. That may not occur until after the Fed Reserve, again suggesting a chance we might like these 3 data points that are coming at us, okay? Now, it's having a problem with the 5-day average. It slipped below it here. We slipped below it yesterday and was able to recover back to it. Maybe today they give up, saying, where's this demand? It should support better than that. But we know the level 4 is coming up for a bottom. So we know it may already be getting a little bit extreme under the moving average, and it may yet be able to bounce above it. So if it can trade above today's current high of 45.73.25 in the December E-mini S&P 500 futures, then we have that opportunity that they just can't find the selling below the 5-day average, that the market's a little bit buoyant, and eventually I think the market is going to go higher. That's the best forecast. I say it bottoms today for level 4, going to be higher by tomorrow. It may only be higher today and then down tomorrow on us. That's an alternate scenario. But I think somehow this market's working higher, even with those 3 data points coming at us. We may only see like 1-day down moves, a few hour down moves relative to those data points. And I think ultimately this market's just going to work higher. It should take out last week's high and move to 46.33 to 46.50s, both cash and futures. Now the daily indicator is lower than what I want, and it's lower than prior highs in the indicator, yet the market was able to punch out highs, but it didn't have much follow through. It was having a problem holding those highs. This may be a bearish setup on this indicator, and this morning it's flipped back to sell signal. So by the end of the day, the market's down and that indicator's on the sell side. That could also be a sign of problems here in the next few days here. And again, the market just may need to consolidate, and unfortunately that consolidation may mean more downside than I want to see. What's the worst case scenario for downside? I think it holds 4,500 or above that, higher, okay? But at any rate, I'm going to give it a chance today to be up today, and I'm thinking there's a chance it might try to stay buoyant to up into the jobs report. We'll get the jobs report on Friday, 8:30 in the morning. I don't think it's going to matter that much. It might scare them for a few minutes, few hours, and then I think they're just going to buy it anyways. And then, but I don't know how much they're going to really buy as they wait on next Tuesday and Wednesday for those data points. Okay. Now, since it's a morning beef, I probably shouldn't go to the weekly chart, but I will anyways. What I wanted to point out is there's our first nice setback intra-week. We actually had a setback there, and it's been enough weeks that normally you'd have a down week, even if it's going higher overall. Okay, so I'm okay with this closing down this week, but I'd like to see it recover some of this, and I think they've done enough selling here, washed it out, correct it. I think it's going to be higher next week and the following week. I think it's going higher into the end of the month, maybe even into early Jan. I think it's going to achieve our idea of taking out the high of the year. We're going to get a new high for the year. For the rest of this larger level 2 up move, that may or may not be a more important level 1, and we'll deal with that later. So I realize this indicator is extremely overbought, trying to pull over to the sell side, but I think it's too early. I think it's going to stay, and it might not be the best of rally moving forward here because we've had such a huge rally. And I've learned that some funds have, a group of type of funds have lost $80 billion betting against the market. Well, as far as I'm concerned, they deserved it because they weren't right. But, we still have to respect everyone's analysis and look over our shoulders and make sure we're going to be right. That's that kind of thing. Any rate, that's what I've got for you this morning. I'm going to move over here and take a quick look at what's going on with the dollar. And the dollar, I think, is heading into a level 2 top in coming weeks here. I don't think it's got a lot of upside, pull back, and I really don't know what to think moving forward farther out. We'll work again. We'll update you on that on Thursday in the weekly update, something a little more long term. Here's gold. They slammed it up, slammed it down all in one day, and yet this is a weekly chart. So that is wild action, and I think that is upsetting the stock market for some reason, and I don't know why. I don't understand it. I think it's primarily just gold gambling, maybe even a bit of manipulation here even. Just bizarre, absolutely bizarre. There's really no reason to do that, and I think the market is telling us that. But I think it's pulling back into a level 2, and then it can be choppy for quite some time, but I think it can be long-term bullish for next year, but I don't see a lot of upside, unlike a lot of gold people. and some people are bullish the next 2 years, and I can see that as well. But I think there'll be a lot of range trade mixed within that. But at least the level 1 might be up into where they're going to push it higher into February, late January. But yes, it should be pulling down now for a level 2 bottom. And I feel more like it ought to go down this week into next week and bottom next week for that. And it really shouldn't have anything to do with the stock market, but I'm wondering, are we getting into some year-end artificial intelligence moves here in some of these markets that aren't going to make a lot of sense, that they're just too dramatic, getting carried away here? Bitcoin exploding higher, but it's also due for a significant top now in the next few weeks. Crude oil weaker, it's helping the economy, it's helping the stock market. I think it's just oversupply. Okay, I don't think this is a sign of poor economic conditions, and it should actually help the economy. Now, something else going to help the economy is lower interest rates, and this is the intraday chart, and interest rates are going down as I speak, and the stock market is starting to come back as I speak. The models revised and showed this as a level 4 top. After all, it didn't work. It was too late, but we have to accept it. And then this is the next level 4, so hopefully we're back to normal trading. Interest rates are coming down. Bonds are going up. Now, I think interest rates should go lower than tomorrow, but they may be able to bottom late today. And this could be the first opportunity for a more important level 3 bottom that might lead to a few to several day rally that could hurt the stock market. It may have something to do with the jobs report, the inflation report, and the Federal Reserve event. But this is only earliest for level 3. We may still learn of lower rates next week, and that is my best forecast still when looking at larger trends. So I'm trying to remain friendly, but there is some warnings that we can get bounces in interest rates and drops in bonds, and it can have something to do with those 3 data points coming up. Now, this is the bond chart, and I think it's rallying into a level 4 top due today. Tomorrow, can't tell which it's going to be. I'm just following it. If it starts trading later today below 110.025 for the December 10-year Treasury note futures, I'd be a little concerned of a level 4 top, but it's only the earliest for a more important level 3. We may still see higher bond prices going into next week or later this week here. However, trade below 109.260 would concern me that we got a level 3 top in place, and if we see it to return to 109.125, we have a level 3 top in place, and that may bother the stock market. Now, all of that can wait a while, and it may have something to do, maybe it waits all the way to next Wednesday for the Federal Reserve event. But overall, when I look at daily, weekly charts and what the model's looking farther out, I still think we've seen a long-term top in interest rates. Somehow we're going to get through this. So the best forecast is the market ought to rally today, and it may rally into tomorrow, okay? And we may have a bottom we're working on now, but we just have to see how the cash market behaves, how the interest rates behave. I don't have fresh news for you. The economy is doing very well. It's going to do much better. Businesses are going to make much more profit next year. We're in a long-term bull market, but we've had such a run-up. It's understandable why we can have some sloppiness and have some problems and complications now through these 3 data points. But I think the Santa Claus rally people are probably going to be right. The market will be up later this month. Past results are not necessarily indicative of future results. Have a great day. Thank you.